Joining me right now to talk about this chaotic week for the markets and what's ahead, the chairman and CEO of RBC Capital Markets, Doug McGregor. Doug, it's great to see you. Thanks so much for joining us.
Thank you.
I want to point out that with a market value of over $100 billion, the Royal Bank of Canada is the largest bank, the largest company in Canada, the 10th largest bank in the world. RBC Capital Markets also posted its best year ever in 2018, up 10% from last year. I guess since you took the helm, you've gone from earnings of $1.25 billion to $2.8 billion. Congratulations to you.
Thank you.
Thank you so much for joining us. You've got this great vantage point in terms of capital markets, and that's where I want to begin. What is going on in these markets where we see one day down 800 points, another day up? The volatility and the nervousness is real.
Yeah, you know, the markets are much more volatile than they were a year ago. I mean, a year ago, we were actually remarking that markets weren't reacting to any news. Now it seems like there's all sorts of news being reacted to. You know, today there's an issue between China and the U.S. This trade issue has been ongoing. It may be getting inflamed by some of the more recent events. And so what is that about? It's a $500 billion plus of assets getting duties applied to them. People are anticipating slowing down the economy, so that's an issue. I was in the UK the last couple of days, and Brexit is very real for the UK and Europe. And that's really having a significant effect in Europe right now. And so, and then there's the yield curve and the flattening of the yield curve. And does that imply we're going into recession? So you're seeing a pickup in volatility. It feels a little late cycle, and the market's certainly reacting.
So when you say late cycle, you mean late cycle in terms of the economic recovery. We're in the late cycle of that cycle of the economy. But what are you seeing from clients right now? I mean, you get this opportunity to talk to the big money investors and watch what they're doing. Is there a sentiment shift? Is there something that has changed materially?
I think it depends on what sector of the economy or what sector of the market you're talking about. What I'm seeing in credit is we're finally seeing some basis point move in credit. There's some widening going on, whether it's the leveraged finance business and leveraged credit or whether it's corporate credit. We've had very tight credit spreads for a long time. So some of the volatility in the equity markets is spilling into the credit markets, and that's really the first time, frankly, that it's been sustained like that for years, really. In equities, oil is a big story right now. It's a big story in Canada. It's a very big business for us in Canada, and the price of oil, if it continues to move in the wrong direction, that is down. You're going to see some credit problems in high yield, and you're going to see, some issues with the oil and gas stocks. So, is technology getting cheap? Is oil getting cheap? Are customers looking and saying, where's the opportunity? We're seeing some of that as well.
Well, I think this is a really important point that you make as it relates to oil, because oil can really go both ways. I mean, you could look at oil and say, well, it's down so much, down 20% in bear market territory. That's a positive for the consumer because it's going to cost you less to heat your home and fill up your tank.
Yeah.
On the negative, this level is threatening shale producers. It's threatening their profitability. And there could be a story when you look at oil that says the economy is slowing. So that's really where I want to get your notion. Do you think there's a structural change in what your clients believe? Are they expecting a real slowdown?
I don't think that the clients see a recession. I don't think they're pricing in a recession. I think they're seeing maybe 3% economic growth in the U.S., maybe slightly less in Canada. I think it's really more about valuation. I think that really we've had a long bull market, both in equities and bonds and credit, and I think people are just concerned about values, and it's backing off. I mean, I think the multiple in the S&P's backed off 2 or 3 points over the last month and a half, and now we're more into average territory.
What about the yield curve? Let's talk interest rates for a moment, because people got worried when the 3-year fell below 3%, indicating that is suggesting a recession. For some reason, the moves in the curve correlate with worries about slowdown and recession.
Yeah, there's a lot of discussion about whether or not it's a reliable indicator of a recession, and if it is, how long a recession comes after a flat or inverted yield curve. Right now, we're not inverted. We're almost flat. I think it's really about people's expectations reflected in the long-term rate that we will have an economic slowdown. That's why the flattening is happening. And it has been a reasonably reliable predictor. The timing just isn't particularly reliable.
Yeah, particularly since we just saw 4.2% economic growth in the second quarter.
Yeah.
3.5% economic growth in the third quarter. You're dealing with big clients on the M&A front, in the capital markets business. Yeah. You're dealing with mergers and acquisitions, new deals coming to market, as well as trading and investing. What does your business tell you?
Well, there's a couple things going on that are quite interesting. One of the biggest shifts that I've seen is a shift from the public markets to the private markets. And so private equity, asset managers have accumulated so much capital over the last couple of years. I mean, the capital raising is just multiplied. And so what we're seeing is still sustained activity by the private equity investor. The Blackstones of the world, or asset managers like Brookfield or Silver Lake. And so there's been a shift, I think, really in our business towards the private market activity from public.
I remember talking to you during the height of the slowdown, and look where you are now in terms of earnings, in terms of the strength of your business. Much better.
Yeah, I think
much stronger.
One of the biggest factors for the capital markets part of RBC's business has really been to grow in the U.S. I mean, that's been a real focus of ours. Over half our revenues and half our earnings are in the U.S. now. I mean, when you take a look at the U.S. capital markets, they are the most robust in the world, the most liquid, and the best opportunity in our business. So, and the GDP growth of the U.S. and just the market structure is really quite good.
All right, we will leave it there. Doug, it's great to have you on the program.
Okay, thank you.
Thank you so much.